So there, people of the internet, basically, I have a little strategy for you guys. Don't expect this to be like a recording, because obviously this is just a live stream, right? So this is a bit of a strategy that I'm gonna start using, because I believe this is it's not really a holy grail, but it's a better way of approaching the market for what it is, rather than just go and just, you know, get fucking lost, right? So now what I just drew here, right? What I just drew here is just the market structure for what it is. Okay, so as you can see, don't get rid of this you know, overlay, because this is basically the same thing as what's going on here, right? I'm just gonna put this right above so that you guys can see this. But overall, this is how the market is drawing. Okay, maybe my drawing is a little odd, but you get the point. Okay, so you want to just like draw it like this, so then you can see from this how the market is, like basically where the market is going, right? So you can see that this took out these lows, right? You can see this took out this some PD area from here, it shot higher, and then you can see that if you can even like go draw like the swings over here, for example, like I forgot to mention, so you want to like make sure you have a full complete structure. So for example, like let's say in this trend, right? So fuck, my bad, I just keep tweaking. But let me just redraw this, okay? Because I drew it like a fucking idiot. All right, so let me just redraw this, okay? So first of all, okay, before that, I'm sorry, I'm not really prepared for this, but you can see before anything, you want to make sure what's a low resistance liquidity run and what's a high resistance liquidity run. For example, a low resistance liquidity run, let's say, for example, let's say this, right? So let's say this high over here is not taken out, and then you start to like go lower, right? And then you start to go lower. That's just assume, okay? So basically right here you can see this is basically, you know, a thing or two about price action is the fact that you always need to sweep this high in order to go lower, right? So if it doesn't sweep this high, and let's say the price just drops drastically, that means at some point, right, at some point it needs to come back and rebalance this, which means, let's say for example the price action was let's say for example, like you see a bit of swings over here, and let's say you how do I explain this? Let's say you see, okay, let's say you see, I should look at it in a bearish example. So let me just say you have this over here, and let's say you have this over here, you see, let's say you have this over here. Okay, so you see all these like swings, right? So basically, like obviously, like let's say you saw like a pretty good PD area on discount, and then you want to entry, but then you're not sure where you want to put the stop loss. Like let's say you get like a pretty good risk to reward if you go from here to here, but like you don't want to like risk it here, because you're not sure if like price will really like go to this level, or if it will like stop at this first draw, right? The way you want to confirm this is simply by following the high resistance or low resistance liquidity runs. It's as simple as this. So the first thing that you want to do here is pretty much you want to make sure this high, right, this high right here is taken out, manipulation sweep, and then a distribution leg, of course, power of 3 as some people call it. Okay, it's basically AMD, accumulation, manipulation, and then distribution, right? So basically what I'm saying is, unless this high right here, or even lows, okay, if you flip this around, I don't really know how to flip things around, but basically like if you flip this around, like even lows, right, this high or low, let me just consider this in like this context, okay? So this high needs to be taken out, okay? Simple as that, okay? Basically, if it fails right here, as you can see, this is a failure swing, which means there's going to be a lot of liquidity here, right? Which means price eventually can target all this liquidity over here, and then it can go and manipulate this high. Simple as that, okay? So what I wanted to show you guys is specifically, right, you want to see first of all where is this happening, okay? Where is this happening? Okay, so you want to see, okay, obviously you can see that these, okay, so you can see that there is a low over here, okay? There's a low over here. You can see that overall in this trend, right, even though all these like lows are taken out, for example, like this low did not take out this low. See that? This low did not take out this low, right? And you can see that this low was taken out by this, okay? Okay, let me show you. But this was not taken out. For example, like when I'm in a manipulation situation, I'm expecting price to take out this low and then go higher, right? But then in this scenario, you can see that this low took this low, but this low wasn't taken out by this liquidity. But you can see later on that this low, right? Fuck, my bad. this low was taken out. Look, this low was taken out, right? Which means now this is canceled out. Now let's look at the highs, right? Obviously, you want to pay attention to the highs and the lows. So you can see this high was taken out, right? This high was taken out. But then overall, okay, when we look at this high did not take out this high, and neither was this high taken out, right? This high did not take out either of these. So you can see that there's a lot of liquidity in this area, okay? So you can see that there's a lot of liquidity, and overall, neither of these structures over here took out any of this liquidity, right? So you can see that there is a bunch of liquidity ranging from here to here, okay? So what I'm expecting price overall to do is go and take this at some point in time, right? Because there's a lot of rest in liquidity and it needs to rebalance its price range, right? It's a 74K range. So obviously, it like you see over here, it did not take that out, okay? This has taken this out, okay? This has been taken out from this, okay? This was taken out by this, and this was not taken out. Okay, this was taken out. This was taken out by this, and then this was also not taken out, right? This was also not taken out, as you can see, right? So overall, right, I'm expecting price, obviously, if you look at it from the lows, right, you can see over here, this was taken out, this was taken out, and then this was also taken out, this was also taken out, right? This was also taken out, right? But then these, right, let me show you guys. So this, once this is taken out, right, you can see that the overall market structure, okay, let me just redraw the overall market structure so you guys can see. So basically, I'm just going to ignore all this noise because up to this point, everything is fine, right? Apart from this, obviously. So you can see that this is the overall structure of how market's trending, right? This is how market's trended, obviously. So you guys can see that this is on average how the market's moving. So as you can see, we shifted from bearish to bullish over here, right? So now we can see that price is overall retesting this fair value gap, right? Retesting this fair value gap, manipulation right here, right? And then we see this retest over here as well. We see this supply level order block over here. So you guys can see that this will be retested, and I'm willing to entry from here, right? From here, from this order block, targeting, because these lows were taken out, mind you, okay? These lows were taken out, so that we have nothing to do with the lows anymore. So what I'm expecting price to do is come back to this demand level order block, because this fair value gap has been rebalanced, manipulation distribution leg right after, manipulated these highs over here, as you can see, and now it's pulling back, just like how we expect price to do, right? So now I'm expecting, so as you can see, there's an inverse fair value gap. So I'm expecting price to come here, right? Come here, and then shoot all the way up here, okay? You know why? Because we need to take out this liquidity anyway, right? We need to, you see this huge imbalance in price? So up to this point, we need to take out this liquidity anyway, because this was taken out by this, but this wasn't taken out. Neither was this taken out, okay? Then this was taken out by this, but then this wasn't taken out. So I'm overall expecting all these draws to be going higher. So overall, I have a pretty good bullish bias as long as we have we come down here, right, down to this point, okay, this order block entry. So pretty much what I'm expecting price to do is, obviously you don't want to entry, like you don't want to put a pending order, right? You want to make sure there is an internal term high, like after the manipulation, because you never know where it's going to draw towards. An internal term high is broken, and then it's going higher from here. For example, like let's say there's an internal term high, right? Internal term high somewhere, like let's say there's an internal term high like over here. Let's say there's an internal term high over here, and then obviously like this high needs to be, then there needs to be a pullback over here, right? There needs to be a pullback over here, and then after that, right, you can see that this is a manipulation, and we have the distribution leg pullback towards this fair value gap, okay, unmitigated fair value gap or some sort of PD array, okay, ideally a fair value gap, and then you see the fair value gap manipulation, distribution right after towards what? First draw on liquidity. You can literally TP here and get a pretty good risk to reward right here. See? You get a 1 to 7. But overall, I am pretty fucking bullish. So I can in fact take this trade all the way up here. So I can look for like the draw that I need to take it towards. For example, this was taken out, but this wasn't taken out either. Look, this wasn't taken out either, right? This was taken out by this right here. You can see that this was slightly wicking above. No, never mind. They're both the same. Yeah, they're both the same. So overall, this needs to be taken out because this took out these highs, and this high wasn't taken out either. Okay, So overall, we have a pretty bullish bias until this point, right? Until this point. So I'm trying to prove that theory, okay? So basically, right here, you can see that this was taken out by this, and we can see all these like lows over here, and we took out all these lows, and we're clear of the lows, right? So you can see that obviously we have this, okay? This wasn't taken, this wasn't taken out, as you can see. This wasn't taken out, okay? This wasn't taken out, this wasn't taken out. Let me just like mark them down. This, right? What else? Yeah, this was taken out, right? Because we had this wick right above, so it was sort of taken out, okay? So okay, let me just make it easy for us. So what's the closest draw, right? This is the closest draw. This was taken out by this, okay? But this was not taken out, right? Overall, right? So what I'm expecting price to do is rebalance this order block, right? Rebalance this order block. Once an internal term high is broken, right? I'm just gonna get okay, never mind, I'll just leave it there. But once an internal term high is rebalanced, that's when I'm expecting to entry. Now this is the 4-hour, right? 4-hour, which means we have a pretty good bias overall, right? Now this is all about creating the bias to go higher, right? So obviously you can refine this. So you can see this inverse fair value gap. So I'm expecting to take price lower towards this fair value gap, okay? This order block, okay? So I'm expecting price to induce this order block as well. I mean this order block, and then go higher, okay? Right after. So we have a bearish bias. So ideally I won't be entering while it's bearish, because obviously we know in the bigger picture we're going bullish, right? Because clearly you can see there's a fair value gap that also needs to be rebalanced over here, right? Unmitigated fair value gap. So what I'm saying is we'll wait for price, right, to rebalance over here, and then we'll long the market all the way up towards this point, right? So we can basically get in even on a 15-minute time frame. You can look for a bias, okay? You can look for, obviously you can see that over here, like I said, it needs to rebalance this demand zone, okay? We can refine the demand zone further on the 15-minute. So if I just like zoom in, you guys can see that this over here, this is the order block, but then over here you guys can see that this low took out this this order block was rolled out, used again, but over here you can see that this down close candle before the up close move, right? So you see all this displacement has not been used. So it's pretty safe to say that you can literally draw this fair value gap within this over here. Let me just like take this over here, and let's expect price to take that and go all the way towards the fucking right, okay? The right side. So this is where I'm expecting a fair value gap manipulation, okay? Fair value gap manipulation, distribution like right after, and then I'm expecting to long the market after it pulls back towards something like this, some PD area over here or somewhere around here, okay? So I could literally entry over here, targeting even right here, right? Targeting these lows, right? If I'm entering here, I could target this low, and then I could target all the way towards this high. This is basically the easiest trade of my life. Look, all this has been rebalanced, right? Let's look for where price, as you can see, these are the down close candles before these are the up close candles before the downwards move, okay? So as you can see, this right here, this area is the upward momentum right here, okay? So as you can see right here, this area, which means we can safely, okay, safely TP up to this point right here, even up to this high, okay, parallel to this high if you want to be safe, right? Get TP up here, simple. We get a 1 to almost 5. It's a pretty good risk to reward, because anything more than 1 to 5 is something that I don't take. So this is more than enough for me, right? So I can basically turn $10 into $50, or you get the point. So I can low-key find a 1-minute entry, right? A 1-minute entry on the 15-minute. Now the 15-minute entry, I can refine it further, like after price has low-key like done what it has to do, right? So after price has done what it has to do, as in on the manipulation over here, like basically the reversal, I can expect to entry of a 1-minute fair value gap that happens within a 15-minute fair value gap. So maybe somewhere around here, so that way I get the maximum risk to reward, okay? So I can like target like the lows, and I think this is like too fucking huge, but let me just like zoom this out. So you can basically like, let me just like show you guys an example. So let's say like, for example, in this case, like once the manipulation is done, pullback entry. So I'm expecting price to low key. Let me just make this a little smaller so it makes more sense. So you can see that if I can literally entry off this, like let's say there's a 15-minute fair value gap somewhere here, right? Obviously because I have this confirmation, right, from the fact that price is in fact going bullish. So I can wait for this 15-minute confirmation and then entry off a 1-minute fair value gap on this leg, targeting this low as my stop loss. Somewhere, let's say the 1-minute fair value gap is over here. I can target all the way towards this drawn liquidity. Okay, it's pretty simple. So basically, my 3 time frames for anyone who's confused, it's these 3. Okay, so this is where I entry, and this is where I confirm, or where I play, basically where I pay. I can't fucking speak. Ping pong. Okay, basically PD arrays, the battle of the PD arrays. Okay, this is basically what I use. Okay, and then this is for the bias. 4 arrays for the bias. Okay, so you want to just pay attention to the overall market structure, where the market is going, and you'll be fine. Okay, so over here you can see that this, on the 1 minute, obviously you have way more noise on the 1 minute. So ideally, what I would tell you guys to do is do this first, right? Then go to this, and then go to this, because there's so much noise on the 1 minute, as you can see, so much noise. But if you go to like the 4 hour, you can see there's way less noise. Comparatively, there's way less noise. Okay. So yeah, that's pretty much what I wanted to show you guys. Just something that I want to show you guys. It's like 3 in the morning right now. And you can see that the price is in a buy program and it shifted to a sell program, but we know for a fact that even if it does pull back, it's going to pull back and reversal from here. Okay, I just want to so ping pong. So basically you play ping pong from the PD arrays on the 15-minute, and you see the reaction and then your entry off the confirmation on the 1 minute. That's pretty much all you guys gotta do. Okay, so you can basically risk here and then take it all the way towards this drawn liquidity. Pretty fucking simple. Okay, because you know what's going on in the bigger picture, so obviously you know what's going to happen in the smaller picture, so you capitalize off the smaller picture. That's pretty much it. So you guys will see, I'll definitely be taking a trade tomorrow that's like this. So yeah, that's basically what I want to show you guys. This is a failure swing, and overall this liquidity needs to be taken out. Okay, it's pretty fucking simple. And yeah, that's pretty much what I wanted to show you guys. And you can see that all these highs were taken out by this huge high, this long-term high, right? But this high was not taken out, right? Overall, you can see that this high was not taken out. So overall, what do we know? After prices rebalance, especially at order blocks, we can expect a price reversal. How are we gonna like confirm if this is really true? With this internal term high, this shift in structure, this one right here, internal term high. Okay, you see the internal term high broken somewhere, an internal term high over here. Okay, on this leg, an internal term high, something like this basically. So let's say like within let me just like, oh my god, I can't. So let's say within this downwards leg, you obviously see these highs, right? So obviously you see this lower high, right? Because price is moving lower, right? It's gonna be put in lower lows and lower highs, lower lows, lower highs, lower lows and lower highs, right? And at some point it's gonna break this lower high to become a higher high, and then pull back, right? It's gonna pull back and then entry. Okay, now what is this pullback? Towards a PD array. Now what is this within this PD array? Towards a fair value gap, which is basically a PD array. Okay, what is this within the fair value gap? Okay, let me just take this aside. What is this within the PD array? Manipulation, distribution, simple as that. Power of 3. Okay, AMD. Okay, and then you take it towards the drawn liquidity. Simple as that. Okay, so I hope you guys got the idea. It's almost 20 minutes of me just yapping, but yeah, overall you can easily take it towards the high. This is like the most cleanest price action ever, because it makes sense as well. You know, even in a normal context, you see that price will pull back towards like 54k, and then it will shoot higher towards this range. Okay, so anyways, you guys can if you see like a, let's say 1 to 12 type ratio, just go for like half, just basically partial. Okay, if you're confident in the 1 to 12, okay, let's say the risk to reward over here was like 1 to 12. Okay, As you can see, it's like basically 1 to 12, right? As you can see right here. So you want to do a 1 to 6. So that way, even if the market does have some sort of weird reaction, you can always just get the fuck out of the market before the market sort of